I look at massive tailwinds over the course of the next 5 years. I think they're going to be incredible winners. I think 2025 is going to be about picking winners and losers. Software clearly in the back half of this year was one of those winners, and I think we're just getting started. We're still trading under that 10-year average.
Well, that was Altimeter's Brad Gerstner earlier today, making the bull case for software in the months ahead. Joining me now is Jeff Richards. He's managing partner at Notable Capital. It's good to see you.
Thanks for having me.
In a minute. Are you as bullish on tech and software as Gerstner?
I saw your segment with Brad, and he certainly came across as bullish. I would say that, I would give you the backdrop of it's been a rough few years. 23 was particularly challenging for software. A lot of companies decelled growth. If you wind back the clock 2 or 3 years ago, we had quite a few public companies that were growing at north of 50%, including Snowflake, who you guys talk quite a bit about. Mm-hmm. The fastest growing companies in software today are just ticking over 30%, and most of them are mid-20s. Snowflake's one of those. But all the really good ones, the CrowdStrikes, the Snowflakes, are in the mid-20s. So we've seen a decel in growth. And I think a little bit of what Brad was alluding to is we're now seeing that pick back up.
I mean, as you saw the decel, I guess the multiples had to come down. And now are they going to be expanding once again, and those stocks are going to be attractive?
Well, if you look back, the peak multiple for software back in, I believe it was November of 21 or December of 21, was 20x forward revenue. That was the average for software. Today we're at about 6, which is the 10-year historical average. So to Brad's point, if you were looking at software 5 or 6 months ago trading at 5x forward, it looks pretty attractive. The question is, are we going to see that growth tick back up? It's kind of been the unknown. I'd say the one thing that we're seeing as a tailwind, we're certainly seeing it in the private companies we're invested in, is AI. Everybody's talking about when is AI going to kick in for software. It's happening now.
Well, it has to be.
It's not a future thing. It's now.
It has to be. That's why these stocks have picked up. We played the sound from when Brad was with us in June where he said software had bottomed, and the outperformance software to semis has been stark. I mean, it's been pretty amazing.
Yeah, and I'll tell you, I've got private companies. Last 2 quarters have been their best bookings for quarters in years. 60 to 70% of bookings are AI or AI related. So, ChatGPT came out 2.5 years ago. It's taken a couple years for those companies to build it into their product roadmap. But the scale, I mean, you guys also talked about the infrastructure build out that's happening that's unprecedented. $180 billion of spending in CapEx by the Mag 7 this year, $300 billion next year. I mean, to put it in context, the entire federal and state government spending on infrastructure, bridges, roads, airports is $300 billion a year. These 7 companies are spending that on this AI build out. So it's now setting the table for the software applications. Think about it as an evolution from the chips. So semis and chips start first. Then you got the hyperscalers and the infrastructure. And then on top of that comes the applications. And we're talking mostly about enterprise software, but also consumer. We have yet to see the Airbnb, the Uber, the DoorDash of AI. That's coming. That's getting funded by VCs right now. Obviously, as you know, we invest over a very long time horizon. So we've been funding these things for 2 to 3 years. And you're going to start to see those companies hit the mainstream in a couple of years now.
Feels like what was bridges, roads, airports, what in yesteryear were railroads, are now data centers. I mean, how do you see the evolution of that, where it feels like a lot of the dollars are now going there?
Well, the other thing that's amazing about this build out is it's global, right? So in our firm, we have a very global perspective. We call it US Plus. You think about, the Amazons, the Metas, the Apples, the Googles, they're not just serving US-based customers, they're serving people in Europe and eventually India and Africa and other countries around the world. So those bridges, roads, and airports serve the US predominantly. But I think what's interesting is think about the tail of this, what the impact to global GDP is going to be. We're very fortunate in the US to have these companies, that they have the cash flow to invest in this. If you look back 20 or 30 years ago, the origins of the internet was built by the government. The government can't afford to spend an extra $300 billion on infrastructure build out for AI today. So thankfully, we have these amazing companies that are building it out, greasing the skids for all this innovation that's going to come on top of it.